And I want to start with a conversation about the Axis Mutual Fund incident. It's just a few days back now that allegations of front running were made against two fund managers at Axis Mutual Fund. It came to light that those fund managers had been suspended pending the completion of an investigation. It also has come to light that Deloitte is currently undertaking an investigation and the report will be out at the end of the month. But let's talk about the implications if you are an investor. Let's also understand what front running means. Joining me to talk about that is Kirtan Shah, the founder and chief executive officer of Credence Wealth Advisors. Thanks so much, Kirtan, as always, for taking the time. Good evening to you. Let's start with what front running is. How would you explain this?
Alex, thanks so much for having me on the show as always. Alex, what typically happens is when the fund management team decides that they want to buy a particular stock, right? The AMCs are not allowed to punch these transactions on their own within their same office. So they have something called as a dealing desk, and then the dealing desk deals with the brokers, right? So the fund management team tells the dealing desk that I want to buy these particular shares and this particular quantity at probably this range of price. And then you have the dealing desk, which will then talk to the brokers, split one order with multiple brokers so that no broker understands how big the order is. And then the dealing desk will try and get this order executed with various brokers. So now, if the fund management team is letting the dealing desk know what are they buying and what quantity, of course, the dealing desk is completely aware of how the price will get affected of a particular stock, right? And generally, you have mutual funds buy in large orders, right? If you look at the volume of the counter and the order size that the AMC wants to punch, you will typically understand how much will the price of the stock go up. Now, if I am the dealer who knows what stock is supposed to be bought and what quantity, I, in my personal capacity, would try and buy that stock before the mutual fund order gets punched, right? So when I try and buy that stock, if I buy it in huge quantity, I will push the price up. And then when the mutual fund starts buying it, the price will even go further up because the quantities are generally large, and I will exit then. So I bought it before the mutual fund bought, and because the mutual fund bought in huge quantities, the price would go up even further, and I will make that small spread and I will move out with a profit. That is what you typically call front running, Alex.
So the allegations at this stage are that a couple of individuals at the mutual fund did this. The question that I think some people are asking is that this evidently happened earlier in the year. The mutual fund did not disclose this. Is that something of a concern?
Of course, Alex. I mean, as far as I understand, and I've been, kind of paying attention to how the story unfolded. I think it was Feb 2022 after, Axis resumed work from home. They internally itself did a sanity check whether all the checks and balances were maintained. And in that internal audit, I think Axis itself identified that there was some lapses in the procedural systems. And which is why they set up an internal audit team and understood that there were multiple lapses across a lot of people, specifically to do with the dealing desk. And they, as far as I understand, they've raised this internally with the management. And I'm also assuming that they've raised it to SEBI to keep SEBI in loop. Of course, they should have ideally come out with this, particularly in Feb when they understood as a disclosure. But I'm not sure if they were waiting for an internal report to try and understand how deep it was, or probably if there was something material enough that impacted retail investors. So I'm not sure of why did Axis not come out with it. But if it is something material, they ideally should have come out in Feb 2020.
Now, we spoke about the fact that maybe they should have, if it was material, talked about it earlier. But what has happened. What are the implications now? There was a fear initially that investors would run to the exits, though, as I understand it, advisors like yourself have told people that they don't necessarily have to do that. One, why are you saying that you shouldn't run to the exits? And two, do you have a gauge as to what the redemption pressure was?
So, Alex, there have been 7 schemes under the scanner of this identified fund manager. Now, out of these 7 schemes, what I understand is 4 schemes are ETF and one is arbitrage, where front running would not have any material impact on retail investors. The other 2 schemes, which is the value scheme and the quant scheme, both of these schemes are less than 1 year old. One fund has less than 1500 of AUM and another has some less than 250 crore of AUM. So there is hardly anything specifically with respect to these 7 funds under scanner, right? Also, if you look at the value and the quant fund, they have 4-5% of liquid cash available as of end of April, which probably, even if there is some redemption pressure, was easy to kind of pay off. But if you look at the larger picture at the AMC level, I think this fund house manages close to 1,40,000 crore worth of pure equity funds, and I'm not talking about hybrid here, right? Very specifically, when the fund house name was announced, I think it was the 5th or the 6th, right? Since then, if you remove the mark-to-market losses because the markets are falling, the redemption pressure, as per my calculation, plus minus 5%, is not very large. If you look at 6th of May, as per my understanding, the redemption was 110 crore. 9th May it was 125 crore, and 10th May it was 40 crore. Right? In such a market where the market is globally not very promising, in the Indian context also we've been falling continuously. I think this redemption pressure of 100 crore rupees on an average on a 1,40,000 crore worth of base is hardly anything. So I don't think this news has really, created the redemption pressure that all of us were talking about. Also, having said this, that there is a 100 crore kind of redemption pressure that we saw after the name of Axis got disclosed in the media reports. If you see Axis AMC, largely as per the fact sheet of April, has close to 11,500 crore rupees, all schemes put together in cash, right? So if you look at some very popular schemes of Axis, which are not amongst these 7 schemes that I'm talking to you of, let's say an Axis Blue Chip, which has some 3,200 crore worth of cash, or an Axis Mid Cap at 2,500 worth of cash, or even an Axis Small Cap at close to 1,870 crore worth of cash available. So 2 things, I think the fund house had enough and more cash available. Even if there were redemption pressure, I think the fund house, without impacting the existing portfolio of the stocks, could have very easily paid off. And at the same time, as per my calculation, like I said, plus minus 5%, because it's difficult to very accurately, calculate this. But I don't think the pressure has been more than 125 crore on one day, which was 9th. And now it is dipping 10th crore. 10th of May was only 40 crores. Alex.
Kirtan, the last word then, because I think a lot of people were worried about this, and I think it was quite normal to draw a parallel to certain other incidents that we've seen in the mutual fund industry, where I think to a certain extent that was an AMC as a whole that had an issue. We can't say that that is the case here, right? And therefore, what is the advice that you would give to investors?
Well, look, this is a very, very, very different case. So I would not really draw any parallels to what happened probably to one of the AMCs that we are talking about 2-3 years back. Look, it is, I would not take away that there has been some lapses on the part of Axis for sure. In fact, like you also rightly pointed out, probably if this was material enough, Axis should have come out in Feb, when they, kind of told this to the internal management, or set up an internal audit committee, right? They should have come out clean and asked the 2 employees that we are talking about to go on a break at that point in time itself. But largely looking at it, Alex, I think fundamentally the kind of stocks that Axis has invested in, we've seen some bear impact on those stocks, because kind of getting data of which stocks has Axis invested in is so easy these days. So we saw some bear attacks. we will see Axis, kind of schemes will probably underperform in the near term for whatever we've just spoken about. But if you go by the last 5-7 years that I've been very closely tracking Axis, the kind of stock picking ability that the fund house has, or the kind of performance that the fund has been able to show for the last 5-7 years has been very good. So I don't really think that that there is going to be any significant impact. But of course, there has been lapses, and Axis will have to come out clean.
Thank you so much, Kirtan, for joining in. That clarity, I think, is going to be useful to a lot of viewers that are tuning in. Appreciate it.